Good to have you on the show. Gurmeet, you have looked at this entire ongoing debate on valuations and you have put some numbers to test out there. Let's talk about Bank Nifty for that matter. Because it's divided into some people love the beaten down private banks, others are in love with PSU banks, but in aggregate, what are the numbers you have put together?
So, Ajay, if you see Bank Nifty 2 years back, roughly October 21, not maybe 2 years and 1 quarter, was 41,000. Currently, it's about 46,000. So that's up by like 12 to 14%. But if you see the earnings, they've almost doubled. So if you see the Bank Nifty EPS, that's almost doubled to almost 3,000. Some people will point out to the valuation difference, but I'm just talking about. So this is a classic case of P contraction and for a very long period of time. So, for example, last 15 years, for the first time, ICICI probably trades at a premium to SGFC. Axis is around 2 book value. SBI is around 1.1, 1.2 consolidated price to book. Price to book, beg your pardon. Bank of Baroda would again be less than 1. On earnings, if you see, we were probably at about 21, 22 times at 41,000, and now we are at probably 15, 16 times. So I think credit is the backbone of the economy. There has been some concern on NIMs compressing, ROEs being under pressure, deposits being difficult to mop up in this environment. But a lot of these problems are temporary. Once liquidity cuts happens, once the rate cycle reverses, treasury gains makes up for any compression of NIM. All of this can turn very quickly. So I think financials are in a very sweet spot. And typically, when things don't do well, is the time to look at businesses. We keep asking ourselves, is the problem temporary or structural? I think the problem with a lot of the private banks, including an SDFC, Kotak, etc., is more temporary. And I think things will change. We've seen that with IT. Commentary was so negative 6 months back. Infosys was 1,200, TCS was 3,000, HCL was 1,000 rupees. I think it's something similar with banking. I think Bank Nifty has legs, and that's one part which is very attractive from a risk reward perspective.
Gurmeet, you also make a point because I see you observe your work, which I really admire. You travel across the country and work with HNIs and retail, which are, which are quite meaningful in their regions, in their cities, in their, local neighborhoods. May not be mainstream on the national front. And then you bring them into, the market ecosystem. You are making a point after meeting them that actually there could be a lot of spare cash on the sidelines.
Absolutely, Ajay. If you see, I think all this talk of MF industry growing from 40 lakh crores to 50 lakh crores looks very good optically. But if you see net sales, it took 13 months for the industry to grow from 40 lakhs to 50 lakh crores. The net sale is just 1.3, 1.4 lakh crores. The SIP book itself for last 1 year, if you see the average, has been upwards of 1.5, 1.6 lakh crores. So if you actually take into fact, I think the net sales are negative. And this is largely mark to market because 20% is Nifty in last 1 year, and small mid caps are obviously up 40-50%. So all this talk of deposit money, bank money moving into mutual fund, I think is a little exaggerated. Some bit of it has started, but I think we are a long way off. Today there was a tweet on RBI report on financial savings. I think the data tells you still the bulk of the money goes into deposits, golds, and LICs of the world. So I think we have a long journey, and that's why I'm very constructive on anything which is a play on capital markets, whether it is AMCs, whether it is depositories, whether it's an exchange, whether it's an RTA agent like CAMPS. I think these things are very structural and very asset light. As you look at, for example, HDFC launched mutual fund by putting 25 crores of capital. Today it makes 500 crore PAT every quarter, which gives you 2,000 crores PAT on 25 crore deployed capital and year after year, right? So as asset light, as infinite ROE as it can get. So I think this play will continue to do well. And we are seeing Nifty at all times high, despite FIs being what $5 billion net sellers in the cash market. Never seen it earlier as far as I am concerned in last 15-20 years.
Right. Gurmeet, talk to us about what have you been researching, what have you been adding your recent addition, your model portfolio, with the disclaimer, not buy, sell calls, but just to understand the thinking.
Yeah. So, Ajay, as you know, we only add things for making things work over a period of time, and we're not interested in just 10-20%. In a short period, we are more interested in long-term holdings of 5-10 years, maybe more. So, few things which have caught my attention. One, if you see the interim defense budget, I'll call them interim because the final budget will come in June. There is almost a 40% jump to airspace, air defense, aircrafts, and aero engines. So if you quantify that, that's almost like 45,000 crores. So I think that part of the defense, which is aircraft related, will continue to do well. I hope we get more corrections in HAL to play that. So we are looking at defense. There've been also mention of fencing and increasing surveillance on Myanmar border. Earlier, a lot of that went to NBCC, and one of the beneficiaries was Zen Technologies, especially on the surveillance part. So we are looking at that again as an extension of the defense budget. So defense is something we are looking at very closely. Energy is another theme I think I'm extremely gung-ho upon. Look at, for example, NTPC. It's talking of it's currently has 24% of the generation capacity of India, and almost 18-19% of installed capacity. They are talking of 130 gigawatts in another 7-8 years, of which 60 is non-fossil, and another 70 odd is basically fossil. 9 gigawatts are already work in progress, projects accorded, reasonable valuations, gives you a more long-term sight on how it will behave. Then they want to delist the renewable business separately, so there could be value unlocking there. Power grid again, if you see, we would probably need 3 lakh crores of transmission lines just to integrate the power into the main grid, which technically means an opportunity of 35,000 crores almost every year on transmission line. So energy space we like. The other one, which I personally think, and I've been writing about, is I think this will be a decade of manufacturing. It will include textiles. It will include defense energy. It will include auto ancillaries. It will include now pharma. Obviously, there's some news on more PLIs getting into the entire pharma value chain. So these are some sectors we are tracking, we are adding in our portfolio.
So how's your earnings quality looking right now? Because the earnings season has just wound up. If you could share of your entire portfolio, how was the blended earnings growth versus the valuation it is trading at?
So our model portfolio, we had a mixed quarter. We've been, I mean, last quarter was 22%. This quarter has been close to 19 and a half. And I think I firmly believe, as if you can track that metric over long periods, the returns are usually in line. It can be slightly here and there in the short period. One space, as I said, which we discussed earlier, I think financials are looking in a very sweet spot. We expect treasury gains to further increase, and this year is very structural. Ajay. A lot of people think that the fall in bond yields is temporary and tactical. I am not in agreement with that. Your current account deficit is flat. The fiscal consolidation, the finance minister has laid down a map for 3 years. The bond inclusion is a very big theme. We don't talk about it much, but I think essentially we are headed for India having lower yields for longer. They say high rates for longer in US. I think India will have lower yields for longer. And this has a lot of implications on rate sensitives, a lot of implications on financials, and in general on overall economy, including housing.
Right. One last question on HDFC Bank. A lot of memes have started. Do you think it's a classic sign? Time to get in, like ITC, those who missed out ITC?
I think so. I think the analyst call is today, and as I said, I think one area which I think HDFC management should have probably come out and given a roadmap instead of market speculating. I think that's missing post Aditya Puri. So I'm being a little upfront in saying that I think that when you do a merger of this quantum, pre-merger and post-merger, I think if you put numbers to it, post-merger HDFC just had it $10 billion in market cap by getting a 6 lakh crore loan book into the balance sheet, by getting a lot of subsidiaries like HDFC Life, HDFC AMC, and others now as part of the bank. So there's a lot of value in subsidiaries as well. I think they need to probably sort out three ratios in my view. What is their guidance on CD ratio, the credit to deposit rate ratio? Second, allay concerns on LCR. The LCR actually dropped from, which we call liquidity coverage ratio, from 121 to almost 110%. I think they need to allay some fears, give a roadmap of how they're going to replace the high cost legacy borrowing and deposit with CASA. They've been adding 1,400. They added 1,400 branches last year. As a banker, I can tell you the branches take 2-3 years to sweat
Right.
and start contributing. And
Excellent.
give little guidance on what their ROE would be over
Right.
next 3 years, 4 years.
All right. Gurmeet, thanks so much for joining us. A bit crunch on time, but thanks very much for watching. We'll take a short break, hear out some market